Welcome to another technical analysis tutorial. This time we're talking about the relative strength index, also known as the RSI. Relative strength index was developed by J. Wells Wilder, and it's a momentum oscillator that measures the speed and the change of price movements. J. Wells Wilder is a very famous technical analyst. He's made many indicators throughout the years, but the RSI is arguably his most famous and most successful. It is an indicator used by beginner traders and expert traders alike. If you haven't used it yet, I recommend adding it to your game and at least trying it out. It's a great indicator. That said, I'm not going to go into detail about how the RSI is calculated. I'm going to keep this video relatively short. I actually had a lot of great feedback on my last tutorial video on candlestick charts. It's only 2.5 minutes long. If you haven't seen that, go ahead and click those annotations and take a look. But it seemed like a lot of people like that shorter length of time, so I'm going to do my best to also keep this video a shorter length of time. So with that said, we're not going to go into the math behind the RSI, but I am going to teach you in this video how to use the RSI in your day trading and how to hopefully profit with the RSI as well. So there's a few key details we need to know. The RSI itself, the indicator obviously here at the bottom, that's what we're taking a look at. So we have two horizontal lines, up here and then down here. That top horizontal line is our 80 line, the bottom horizontal line is our 20 line. When we are over the 80 line, that's when we are considered overbought. When we're below the 80 line, that's when we are considered oversold. And by the way, these green and red lines, these are both moving averages. We have the fast and the slow moving average. So just keep that in mind. But really, you're just going to be using these overbought and oversold areas to really use the RSI. Now, there's some misconception behind what overbought and oversold means. A lot of traders will tell you that when we are overbought, that means the price is bearish because it's been overextended to the upside. It can only come down from there. Now, they'll also tell you that when you are oversold, that's bullish because the price has been selling off and it can only go up from there. Now, these misconceptions are actually false, and I'm going to show you why right now. You can see when we are overbought, that's actually when we see the price running up. So I'm going to draw lines the entire time we are overbought, and you guys can see what has happened to the price the whole time we were overbought. So we went overbought here on this candle, and then we started going oversold on this candle. This was higher. We went overbought here, and we finally started legging down here. This was higher. We went overbought right around here, and then we started selling off right around here. Once again, higher. So the entire time we're overbought, that's when we can see the price start running. The only time that it's bearish on an overbought area is when it starts legging down below the 80 line. Once it starts legging down below the 80 line, that's when we can see some selling off. Now, there's not too much selling off on this chart since we're looking at MGT, and this thing has been super bullish all week. But you can see that once we did start breaking down below that 80 line, we did see a little bit of selling off here on MGT even. You know, we had a red candle right after. We had a lower price point there. We had another red candle here. So once you break down below the 80 line, that's when it starts getting bearish. But if it's above the 80 line, that's not bearish, that's bullish, and that's when you can see the price really start running. Now, on the flip side, when we are oversold, that's not bullish, that's bearish. Look what happens to the price where we go oversold. So we went oversold here, and then we finally started legging up right around here. But that was lower. When we were overbought, we saw the price go lower. Once again, it wasn't a dramatic decrease since MGT has been so bullish, and that's the chart we're looking at, but you still see that it did decrease indeed. So over the 80 line is overbought and it's bullish. Below the 20 line is oversold and that's bearish. Overbought is only bearish when it starts breaking down below the 80 line. Oversold is only bullish when it starts breaking above the 20 line. Now, with that said, the area between the 20 and 80 line I like to call no man's land. When it's between the 20 and the 80 line, you don't see huge increases in price until it's either overbought or oversold. When it's in this middle area between 20 and 80, you can really see anything happen. That's when you'll see a lot of channeling happen, for example, or you'll just see the price isn't really going in any direction. It's just kind of hanging out. So just keep that in mind. So that's really the basics to the RSI. A little bit more of an advanced concept you need to keep in mind, though, is that the time frames you're looking at on the chart will show the RSI the RSI will be different on different time frames. Let me put it that way. For example, you might see on the 1 minute chart that the RSI is overbought, and you might say, oh great, it's overbought, okay, it could start running up. Now you could go to the 5 minute chart and it's also overbought, and you're like, okay great, the 5 minute chart is also overbought. But then you go to the 1 day chart and you can see that the RSI is oversold. So these longer time frames will give you a greater overview of the overall trend. The shorter time frames will give you a overall outlook of the intraday trend. So for example, if it's starting to become overbought on the 1 minute chart, you might see a increase in price. But if it's oversold on the 1 day chart and the overall trend is down, sure, on an intraday level, it might go overbought and you might see a little spike up, but it probably won't be a run or anything like that because the overall trend is still down. So basically keep in mind that the shorter time frames are going to show you an intraday level. The RSI on the shorter time frames will show you an intraday level of what the price action may be, but always remember to take a look at those longer time frames to get an idea of the overall trend as well. Super important. Even if you're a day trader, take a look at those longer time frames and see what the RSI is at those longer time frames. It will give you an idea of the overall trend, and you'll know what to expect on an intraday level as well. With that said, that's really all there is to the RSI, guys. It's a really simple indicator to use, but very, very effective. Everything else you can learn with the RSI, you really just have to learn through trial and error, through experiencing it yourself. So what I taught you in this video is the basics, and it's definitely enough to start using the RSI. If you understand everything that you watched here, it's definitely enough to start using it. Go ahead and throw it in, and just learn through trial and error after that. So I wish you the best of luck, guys. If you enjoyed this video, please give it a thumbs up, a like, all that good stuff. If you have any questions, leave it in the comments below. I'd be more than happy to answer any questions you have. And I'll look forward to catching you guys in the next video. Hope this helped you out, and have a good one.